Let's take a look at some charts from this week's Bitcoin Bull Run article. What a week it has been. What's that saying? You can have weeks within minutes, years within hours, something like that. Very quickly we saw where the liquidity was, where the rubber met the road essentially in the order book. And finally we've entered price discovery. True price discovery, no doubt about it. All exchanges, all time frames. So I did one of these in maybe October. I did one for a few coins where I look at this bull run moonshot targets, right? The stuff that I think sometimes is silly, but ends up being inevitable for Bitcoin. Maybe for Bitcoin, it's up and to the right. That is the name of the game. If you look at most coins that have been around since Bitcoin nothing has returned to its all-time high recently like Bitcoin. That's for a different article, different video, but right now the spotlight's on Bitcoin, so the question is obviously, where do we go from here? Now, as someone who got into trading in 2013, didn't know much, sort of bought the top, somebody who lived through the 2017 bull run, 2018 bull run, still kind of felt like I didn't have the tools I needed to properly evaluate like possibilities, right? This isn't about expectations, it's about possibilities, because when stuff like last week or this week happens, it's hard to sort of sit on your hands and just hold your position because everybody gets excited, right? So it's good to have a backdrop of what are some possibilities here, what's going on, how can we measure this stuff? Something I use frequently, kind of as often as I can, is Fibonacci retracements and extensions. They are, on all accounts, magic numbers that work. I don't know how else to describe them. I'm a man of science. I wish there was some sort of statistical, mathematical explanation. Maybe there is, it escapes me currently. But there's a Fibonacci retracement tool on TradingView, and basically you pick the highs, you pick the lows, click here, drag, and you get one extension on the Fibonacci lines, the 1.618, very popular target for most chart patterns and or places where price will most likely relax a little bit, where price will consolidate a little bit. You can see that, this is all sort of reading the tea leaves, but if you just fib out anything, you look at the 618 fib, typically you get some sort of response there from support resistance. I like this here because very clearly I have this is the 50%, which isn't a fib, it's just 50. And this is the 618. And you can see how the 618 was support, resistance, 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 support, and off it went. But part of this is just seeing what happens at the 618 enough times where you're like confident and thinking, okay, I'm gonna believe in this nonsense, right? This TA nonsense, and think I'm confident that it'll go to the 1618 at the very least for these chart patterns specifically, which I use on any chart pattern I ever map out. I always look at the Fibonacci extensions, the 1618. So if we're looking at the 1618 for all-time high, previous all-time high to November 2018 low, we get a 1618 of 30K, currently still a target. If we look at the 2019 high and March 2020 low, we get a 1618 of around 18K, which is where we actually paused for quite a bit. It wasn't exactly on there, but for me, it's good enough, right? This isn't about like picking exact targets to the penny or the Satoshi. This is about giving some idea of possibilities. So if we look for the next fib up, it's at 26. So the 2.618. Sometimes for altcoins like ETH, I've seen this before, it'll dump to like the 3618. The 2 or 3618 are important to watch if stuff gets crazy, right? Like we are now in Bitcoin. This is crazy, demand is insane. We're at all-time high and there's still people buying. I don't know who, but they're buying. The institutions, they're buying. They don't care what price it is, they're buying. So it's important to just take a step back, fib this out. Okay, maybe you're in a margin long position on low time frames and you're wondering, what's my upside, what's my downside? This is one way to do that. Maybe you're in a hodl position from March or earlier, 2017, and you're thinking, okay, what are some possibilities here on technicals where I can take a pause on the gas pedal a little bit, maybe sell some, maybe go into cash a little bit to sort of acknowledge support resist areas for price discovery. It's not to say it'll be the top, but it'll be most likely an interim local top. All right, that's enough about fibs, but again, I mean, you see this stuff enough and you start to believe. You just do. You just start to believe, and enough people believe, we get to those places. Another one I really, really like, almost better than fibs because it's mathematic and non-subjective, are yearly pivots, traditional yearly pivots. These print January 1st of every year. They're based on the highs and lows of the previous year. And what do we have here? Yeah, again, similar to the 1618 for where we are now, this yearly pivot was acknowledged by the market. You know, whether or not directly or indirectly, subconsciously or consciously, I don't care. We sat here for quite some time, you know, after the moonshot before making higher highs. The next rung on the ladder, which is how I view this as a ladder. I really like metaphors, so ladder for pivots. If we get to this rung on the ladder and decide we want higher highs, that's the target. Immediate target to the upside is around 24, 23K. And if you want to backtest that, it's right in front of your face. You know, if you look at 2019 highs, again, these are printed January 1st. This was a 2019 high. This was the 2018 low, printed January 1st. Okay. There's a reason I love pivots. I love talking about pivots. I love showing people pivots. If you look at Link, R5 yearly pivot is kind of where it's at right now. So pivots are always good to look at, and pivots will expand if price is super volatile, and they will contract if price is sideways. So the 2016 pivots were very tight because 2015 had very low volatility overall compared to 2014. The pivots of 2018 were insane because volatility for 2017 was insane. If we look at what happened in 2020 since January, yeah, that's a massive range. That's a 100% range plus, right? So pivots probably blow out a little bit, maybe not as much as 2019 because this was probably more volatile. You can sort of front run them by putting it in the calculator, pivot calculator, and looking that up if you're curious, if you want to see what the pivots will look like for next year. But it's always good to have these permanently on your chart just as an acknowledgement, you know, because you never know, right? You never know. Let's say we're into a high on weakness. Here's the worst case scenario if you're bullish. You don't want to see higher highs into a yearly pivot on a bearish divergence. The opposite of that, you don't want to see what we saw here if you're bearish. You don't want to see a bullish divergence into a yearly pivot because that says not only is this mathematically some sort of support, but bearish momentum is weakening, and the opposite is true, of course, for the bull side. So it's definitely something to watch for into 2021 and towards the end of the year for the pivots. They're not perfect. They don't always pick the highs and the lows, but when they do, man, it's impressive, right? Here's another one. This is probably my favorite one, the MA multiplier, not because it's a massive moonshot target that has perfectly picked the tops and bottoms since 2012, but it's dynamic support resist, right? Like, I just love it. It's literally there on the chart, smacking you in the face. Buy zone, sell zone, sell zone, sell zone. Right now, the sell zone isn't until 47K. And I always say this on every MA multiplier explainer I do, but I think the key here isn't that when we break through to the top side of the red resistance, the multiplier, 5x the 2-year MA in this case, that isn't an immediate sell signal. It's a get ready to sell signal and or dollar cost average out of your position, including cash. This is like hodl position stuff for me. The hodl position cash out starts at 47K and that'll keep going up, you know, through 2021 if price keeps going up. But you don't want to be out of your entire position until we actually break down from the red line, the MA multiplier. Same thing with the buy zone. You don't want to be into your position fully until we are above the buy zone. You know, you want to start dollar cost averaging here, buying. You want to start dollar cost selling, averaging in the red zone. So we are nowhere close to that yet. If you're a hodler, here's Tesla. Just pick a chart. You know, I love to look at just random stuff using this TA. People love to talk about backtesting and will it work for X, Y, and Z, altcoins, timeframes, blah, 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 blah. Just pick anything. You know, if you're not confident that this is worthwhile using, just pick something else and see how it looks, right? How does it look on Tesla? How does it look on silver, gold? Look on anything. I don't care. Here's the 2-year MA down here. Here's the multiplier up here. And again, it says we are in territory which last time was the top for Tesla. some random stock that's going insane, FOMO, yada, 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 whatever. So it'll be interesting to keep watching something like Tesla and see, you know, will it break down from the 2-year MA? Maybe you're in Tesla, maybe you're not, whatever. But it's always good to, like, you know, look around the neighborhood. What's going on with other stuff using these indicators? Am I just like crypto-centric here with the MA multiplier, or does this stuff work with other stuff? Here's something that is Bitcoin specific, the log growth curves, which again are scary. They are scary. It gives me the chills when I look at this because they have perfectly predicted the tops and bottoms aside from March 2020. I mean, look at this. It literally rides the bottom of this log growth curve, and it taps the top of the log growth curve. Currently, the top is 93,000. That'll keep moving up a little bit. You know, this for me is the ultimate, I want to be out of my position type stuff when it approaches this level. This, the MA multiplier is get ready, and this is, oh boy, let's game on, I'm out, right? If you were to buy the bottoms and sell the tops of this historically, I mean, you can't beat it. You just can't. It's insane. It is absolutely insane. And you can talk about dollar cost averaging out, or, you know, in or out based on where it sits on the log growth curve, but this is another free one to look up on TradingView. And then lastly, talking about Pitchforks, you know, the Pitchforks get a lot of hate, and don't really know why. I first learned about Pitchforks in 2016, probably. The idea is you pick 3 points and you get a rate of change established for price. Either price will remain within those 3 points and you can sort of predict where price is going to go, or it won't. If it's bullish and if it drops below, it's invalidated. If it's bullish and drops above or crashes above, in this case, you know, the question was always, what do I do? I don't know. Like, I don't know enough about Pitchforks to know. In 2017, what happened? Clearly, there was an acceleration of the rate of change there, and you probably could have pitchforked this out into something else. But currently, if we are on the road again back to the median line, which is basically where price wants to live, the other reason why I use Pitchfork so frequently was because it just fit this so perfectly. Tops, bottoms. Again, what else do you want? Where do you buy? Where do you sell? The target, sir, that sort of stuff. It's all right there in front of you. So it was really good in 2015, 2016, 2017, less so in 2018, less so in 2019. Sort of caught the top though, and caught some support. Price acknowledged this area for sure still. So the question is, will it acknowledge it again at 33K? I don't know. But hey, there's a target for you, right? 33K. Here's a current updated Pitchfork. Pick 3 points on the chart. Pretty good local highs, local tops, that sort of thing. I do use Wix. There's some argument to be made to not use Wix, but just backtest it, see what it looks like. I like Wix personally. It actually gives a less aggressive Pitchfork in this case. So we are currently above the median line, and we're headed to around 27K as far as the upside resistance, but a reminder that price likes to live in this median line brown zone rate of change area. So overbought is up here, oversold is down here. So you can see we were riding the lower bounds of the median line for quite some time before returning. So it's no surprise at the end of the day that we are where we are based on this. If you were to draw this, weeks ago and you were following this, you were just thinking, duh, like this is where the rate of change wants to go. I'm going to buy more here. I want to sell up here, that sort of thing. So hopefully this was helpful. Hopefully you keep the euphoria tamped down and realize it's just price at the end of the day. Price doesn't care what price it is, right? And most of these people buying don't care what the price it is. It's just about the narrative, hedging, inflation, crazy world we live in, decline of the dollar. That whole macro story is getting really attractive to people with lots of money looking for an alternative store of value.